Oh, hello, hello. What is up, everybody?
What's up, Daddy?
How, how we all doing? How we all feeling?
Alive and kicking.
Oh, I like that. I like that.
So awesome
Everybody-
to see so many of you here.
It's packed in here. How many little squares are going to be in here?
Oh, I think plenty. Looks like a fun event. Thank you everyone for joining. Good evening, good morning, good afternoon.
Good
Hello,
day.
everyone.
Hey.
Hi guys.
Long time no see, Siddharth, Abhishek.
Hello.
Thank you everyone for joining. Good evening,
Hey,
good
everyone.
morning.
Good day. Good evening.
Good evening.
Hello, guys.
Hello everyone. Awesome. So I think we'll just wait a couple of minutes till everyone gets in, and then we'll just start by presenting to you guys what we've had basically planned for today. Just to sort of give you sort of context to what we're doing here. We started off in 2018 with a certain vision. We built a roadmap around it, and, executed a lot of things based on that roadmap. But we've come to a stage where we kind of now want to take the roadmap to a different level by adding several different components to it, and sort of want to take a community first approach to adding these additions to the roadmap. And then we always sort of feel like a lot of the folks who are present here on this call, you guys are sort of the first members of community that we want to go to in order to consult you guys about how this direction sounds to you guys, and certain components of this, your insights would certainly help there. And then obviously going forward, where we have several other initiatives where we're going to announce, where we want to get the community involved as well in helping us sort of revamp our roadmap and add to it in different ways that we want to proceed. So I think just another minute, and then we'll start with the agenda for the day. I believe there's a video that's been prepared by the team. So we'll all just go through the video once and then go through the agenda. Awesome. Looks like the team was pretty hyped up for the town hall. Nice. So great. I think let's kickstart the discussion. Sorry, I'm just sharing something, Pete. Yeah. Okay. Cool. So thank you everyone for joining. Starting off a bit with where we started Comdex, and that'll just give you guys context to why we've chosen a lot of the things we've chosen to do. So we launched in 2018, as most of you know, focused on fixing the problems of financing in the commodity space industry, especially focused on creating the tools that small size, medium size enterprises in the space need to access financing in a competitive manner. So that's sort of where we started off. 1 second, I'm not sure why the presentation is stopped. Okay, yeah, there we go. So yeah, so we sort of always had this vision of creating a technological layer that's bridging DeFi and CeFi, because As we saw the emergence of DeFi in 2020, with a lot of liquidity flowing into the space, especially with a lot of institutional capital also coming into the space, we realized that this is an opportunity to create the bridges that are allowing liquidity to flow, fluently between the two realms of finance, which is DeFi and CeFi. Next slide, please. So the roadmap we sort of came up with initially was keeping in mind what we always wanted to fix, which was the problems of financing. The approach we wanted to do was to create like an ecosystem of synergistic solutions that can communicate with each other and help solve different angles of the financing problems that exist in different traditional finance industries. So it began with us, building our own synthetics protocol to create the CDP modules, the exchange-based modules, which enable creation of applications that are allowing, financing in various different spaces that they need to be applied to. So that protocol that we created, the synthetics protocol, would also launch with its own synthetic app, where we wanted to create derivatives of commodity assets, which would enable, DeFi investors to take exposure in commodity assets through their crypto holdings. Further down in the roadmap, we also, had a plan to launch our own collateralized stablecoin, the USCX coin, simply because at the end of the day, when you think about a synthetic asset which is created using a CDP, any stablecoin is basically a synthetic asset of a US dollar. So essentially, having a US dollar based, stablecoin within our ecosystem helps for all these applications to sort of have that value transfer captured in that single currency. And then also on the existing enterprise app that we had launched in 2018, we wanted to enable the settlement layer for payments through the USCX stablecoin that we launched of our own. And then ultimately ShipFi, which would be an app for capturing on-chain LP subscriptions of funds through DeFi investments. So DeFi holders of stablecoins could essentially be LPs in funds that provide liquidity to real-world financing on the supply chain side, on the real estate side, and various industries like that. So as you guys can see, most of what you see on this roadmap, it's what we announced earlier on in the year, and it pretty much ties back to a lot of the original sort of root visions we had in mind when we thought about Comdex and thought about launching it, especially into the Web3 realm of how we do things. So, as I said, the reason we entered the space, we identified gaps in the CeFi space, predominantly, originating from paper-based processes, which kind of slow down a lot of the compliance and legal check processes as well. All these verifications come at high legal expenses and high transaction costs. And then generally there's all of these intermediaries sort of exist to eliminate the risk factor that comes from counterparty risk, which comes from lack of trust as a whole. And the space that we are very familiar with and in touch with is commodity space and then trade finance. So in our own sort of exposure in the space, we've seen that 2019, when we launched or when we sort of, had the app go live for the enterprise trade, the trade financing gap was at around $1.5 trillion. But with the impact that the pandemic has had, all over the world on supply chains and on global finance, that trade finance gap is now more than doubled since then. So that essentially, speaking about our enterprise trade application, kind of doubles our total addressable market because the financing problem is the problem we wanted to originally fix. So next slide, please. So yeah, I mean, Abhishek, you can talk a bit about how we sort of approach the financing part of it as well.
Thanks for that. Thanks, everyone for. We see a very good attendance here. Really happy to see so many people joining. What we wanted to discuss was, what were we try? How did we reach to even building the synthetics protocol, right? So just as a refresher for people, most of the financing in the world is collateralized, right? You put up a collateral. And as a collateral in the real world in a bank, you can actually put up your a mortgage or any sorts of physical assets. You can use gold as collateral. So everything works in a similar fashion where you end up locking up an asset with a bank, or and that asset can be a house, gold, whatever, and against that you take a loan. Likewise, in crypto, protocols as well, you see people you over collateralize by bringing in either Atom, ETH in an Ethereum ecosystem, or stable coins as debt, and take borrow against it basically. So this whole mechanism of locking up an asset and minting or borrowing another set of asset is what we thought would be like the base to create all sorts of DeFi applications on top of the protocol. So, and this is why Comdex created a very generic CDP protocol where it's just a collateralized debt. And what we try to do is, we want to have, of course, to begin with, we will have Atom, Osmo, Luna, USD as collaterals, but aim would be to also create NFTs of these real world assets which can then be used as collateral, because this in a way would finally replicate whatever is happening in the centralized finance world as well, and truly help give power to both these ecosystems. Because now just for imagine a bank wanting to create their own token, and they have different set of assets that are that can't really be bought on chain. So an NFT that represents those assets can be created and locked up in the CDP to mint whatever assets people want to mint. Of course, it becomes challenging for retailers to do it from day one, because it's challenging to verify if that NFT is real. But for big institutions where most of the data is public, it kind of becomes doable, that you can bring in all these people to put these NFTs as collateral, and it's open for verification by anyone on chain. So this is the realm we are operating in, and in a way, our first version of the synthetics protocol is done. So and this was another reason to invite all validators first, because the binary update would be coming in soon. We'll showcase the app as well today. I know we've been saying soon for a very long time, so today would be probably mark the ending of that long journey. So we our approach so far has been creating the enterprise trade that Siddharth was discussing, and only thing we couldn't do properly there till this date was instant settlement for our clients, which I'm pretty sure we will do this before the end of this year, and hopefully in Q3 itself. Synthetics protocol, it's something that we'll just showcase to you. And ShipFi, like Siddharth said, it's if it enables crypto users to kind of become LPs into funds, which they couldn't do before. This gives for a CeFi user, an LP is getting earlier liquidity or maybe an earlier exit. And a retail user is now getting access to something he did not have access to before. So this way it kind of helps both ecosystems, and liquidity can then seamlessly flow between the two worlds as well. So I mean, like I said, stable coin settlements and financing with USCX it would be the aim for the enterprise trade. And the synthetics app that has been created, we'll be launching it as our C-Asset app. We will create a native token, to govern the app separately as well, which will be launched on our own chain. And possibly, Sid, if you want to go over the app maybe and show everyone what's the update like.
Sure. So I know a lot of you guys have been excited about the app, especially seeing what's going on in the commodities market now. We've seen a lot of these commodities like nickel moon on single days. So everyone's kind of hyped up to get involved, and we're coming very close. So here's just a quick sneak peek at what the app looks like. Just broadly, this is what the dashboard would look like for any user who comes on, get a few insights into what's happening at the protocol level, the application level. Creation of synthetics now, as we've discussed earlier on, if you go to the borrow section, it's basically in the form of debt. And you can post a range of IBC enabled assets as collateral, as you can see: Atom, Osmo, USD, Luna, XPRT. And then you kind of select your collateralization ratio. And as you can see there, the kind of assets you can create, which is in the form of debt, is basically a gold, silver, or crude oil. And yeah, if you go to the swap page now, this is where you get to see the swap interface for what it looks like to trade between these assets and CMDX. And then obviously, since this runs on an AMM, we'd have liquidity pools where users can provide liquidity in the form of gold, CMDX, or any other asset, and the tokens that it's paired with. And then there'll be attractive liquidity farming rewards as well early on for adopters of the platform. And then, broadly speaking, we'll all obviously have a lot of governance functions in play when the app comes live. A lot of functions related to maybe modifying a few parameters in how the application runs, and maybe adding a few more collateral assets, adding a few more, synthetic assets as well, which is something we wanted to propose, and you guys will see later on in the call what we're trying to do along those lines. But yeah, this is broadly to give you guys an idea of what the interface will look like for the application. We're very close to pushing it. A lot of the folks in the team are working very hard and getting a lot of the minor things perfect before we can then push it out. But yeah, I think we could go back now to the presentation and then also speak more about some of the the bigger announcements we have in terms of more additions we want to do to Comdex and the ecosystem that we're trying to build. So yeah, these are the proposed sort of revamps to the existing apps. But Abhishek, now we can speak more about the newer additions now we have in.
Thanks, Sid. And we will be sharing the link, of the faucet, of the app, so that you guys can try it out as well. And feel free to comment on, whatever differences or changes that you would like to see on the app. The new set of introductions that we want to do is we want to create a collateralized lending app. We're thinking of calling it Komodo because it kind of means a loan in Latin. So we want to create that very simply, because all the other structures that's required to create a synthetic app, that is locking up an asset and liquidating it whenever the LTV drops. It's the same mechanism, but instead of minting a C asset, it enables users to deposit and withdraw from a pool, and every other mechanism, of course, remains the same. Only other difference also is calculation of the interest rates that happens in any lending protocol. We've gone through models of Aave, Compound. We're basically looking at great work that's been done by the Mars protocol team as well, and trying to understand if we can build something like that very very quickly on our own chain. So this is something which will come out really soon, right after the Synthetics app as well, because we foresee this shouldn't take us a lot of time to build. And Zenscape is going to be our own validator operations that we will want to run on different on different chains. I see a message, uncollateralized lending. So uncollateralized lending, would mostly be it's to provide liquidity to the pools. So basically, you don't get to take the asset away from. I mean, it's very restricted on what you can try to do with the asset. Like I said, we are still trying to learn more about how we can implement it, where you can just borrow an asset to provide liquidity, as long as you have the other part. So let's say, for example, if on a CMDX Atom pool, let's just say, if you already have the Atom but you want CMDX as a loan, you can use that as long as you're using it to provide liquidity on the DEX. So that is how uncollateralized lending would work, or that's how we're imagining it. Let's just hope we do it soon. Zenscape, like I was discussing, is the validator operations. What we want to create as well. Historically, we've been and I've personally been always involved into hardware. I've been an Ethereum miner for a very long time, and I always wanted to run our own set of hardware. So it helps with the great cross collaboration between a lot of protocols that will get onboarded and that are already existing in the Cosmos ecosystem. Primary reason is that most of the things that we make, we would want these assets to actually flow to our chain, so that naturally a bigger market gets created. So this is and obviously a validator helps them in getting better visibility into these different protocols. So that's probably these two things. And USCX is in a sense it is just another C asset, where we have everything ready to because it's a CDP at the end of the day. The only thing that we want to do is balancing a stable token is the only tricky part when creating it. So we're thinking of like a MakerDAO model where we can have a token like Maker created just to balance the token if it ever falls outside the peg. But everything apart, everything is already from a code standpoint already exists to launch USCX very soon. So this way we'll have these three very important things to finish over the course of this year.
So yeah, I mean, speaking broadly of how we want to do this at a high level now going forward, C Asset launch, the app for a synthetics app called C Asset is going to launch pretty soon, as you guys just saw the screens for that. As soon as we launch that, as Abhishek mentioned, most of the things are in place for us to launch something like a stablecoin, which is just another synthetic asset which tracks the price of the US dollar. At the chain level, we've made a lot of progress on being able to also create the infrastructure that's required for launching an app like Komodo. So we're in the process of fixing a lot of the minor mechanism, and as Abhishek mentioned, looking into a lot of the existing good work that's been done by other protocols in the space to kind of apply it in an IBC way. And then we've already sort of onboarded a few folks on the traditional finance side on our enterprise app. In terms of their interest in using settlements or using stablecoins for their settlements. And typically these folks would bring with them large volumes of commodity trade on the platform if they were able to truly extract the value that instant settlements could bring them. And then also on the C asset front, we want to expand the collateral set and as well as the commodity set. As you guys saw now, we have just gold, silver, and crude oil to offer. A lot of what assets we can offer is contingent on the kind of oracles available. So that's another sort of subject we wanted to open up, as a discussion in this call a little further. Primarily on the collateral asset fronts, on the synthetic asset fronts as well, looking at trying to introduce synthetic crypto assets into the ecosystem as well. So, having synthetic BTC, synthetic Doge, synthetic Ethereum, so that, people have more options to sort of do, liquidity farming. Not just in, let's say, in gold and CMDX, but could be gold BTC or crude oil BTC or whatever they wish to sort of. It gives them more flexibility to access a broader range of synthetic assets. In terms of the collateralization as well, as we introduce more different types of synthetic assets, the kind of collateralization ratio required for the existing collateral assets that we access, that we accept at this point, we'd want to sort of broaden or open up that model making process within the community to sort of hear the insights of what you guys have to say and what the community has to say as well. So we'll be making a lot of what we have discussed internally as a team public in terms of sharing a lot of the initial thoughts and the initial approaches we've had. We'll as you guys will see later as well, we've launched our own forum, which is forum.comdex.1, which is where a lot of these discussion threads will now be opened up. Open for validators as well as community members to join along and contribute. Sorry, just can we go back one more slide? Yeah, and in general as well, as I mentioned, for the growth of a DeFi ecosystem, whether it's in Ethereum or in Cosmos or any other layer one, So one of the sort of fundamental pillars of any good DeFi ecosystem is a vibrant Oracle ecosystem within that, because a lot of DeFi functions rely on oracles. And what we've sort of observed is that there is room for certain competition within oracles that exist within the Cosmos ecosystem today. So part of what we also want to do as an effort going forward, on all the different fronts that we have opened up in front of you guys today, we'll obviously want to have different ways to incentivize folks to get involved and help us build on these various initiatives, but also probably use part of our community dev fund to actually incentivize any builder who's out there today looking to build oracles within the IBC ecosystem, because that's something we sort of envision as being a key component to the growth of DeFi in general in the ecosystem. And then also looking at expanding the commodity synthetic asset set, because assets like nickel and the other assets at this point have seen great growth in the market and drawn a lot of interest from retail investors as well. So these are sort of the initial thought processes that we're kind of at this moment discussing as a team. And part of the purpose of this call was to open up the floor to you guys, give you an insight into our plans, what we're trying to add on an ongoing basis. So yeah, I mean, would love to open up the floor now. I know there's a lot of information that's come your way, and it's not necessary everyone has something to say. So which is why we also want to take this discussion from this call directly onto the forum discussion that we have. But happy to hear what you guys have to say. And also Abhishek, if you want to add something to something I might have started.
Yeah, I see a few messages in the chat and wanted to address them first, before going forward. I mean, why the decision to create a stable? We just believe, there has to be a fully collateralized stable token as well as the USD, and we would obviously be using USD, on the platform. Even on the screens, you would have seen, USD is an acceptable collateral anyways. Why? I mean, we still believe that there should be a fully collateralized stablecoin as well. I'm aware a few other protocols started it, but without IBC it doesn't really make a lot of sense. But it's a simple thing to create as well, and it's an easier thing to sell when you're selling the stable token to institutions, and trying to understand how it is backed by something else rather than just Luna. What are the chances of integration with Mars or other info? So insurance, for sure, we will try to get it as quickly as possible. Leverage comes only through having very, very good liquidation mechanisms. To be honest, if you have a very good liquidation mechanism, you can actually lower down the the collateralization itself, and that is something which we'll see on how the protocol develops. But getting insurance from other protocol providers, that is something we will for sure have. Django, I'm not aware of the Injectives Chainlink integration, but we'll surely check it out. And if it's going to the SDK, then nothing like it. Siddharth said, we are already working with a couple of Oracle providers who've been doing well in the Ethereum space, and wanting to onboard them into the Cosmos ecosystem. With the EVMOS launch, would actually enable a lot of these people to quickly migrate to our ecosystem as well. Yes, I mean, there is a consideration. We'll have to maybe we'll start with getting our legal team to actually advise us on making it non-US, or or whatever would be the best way forward. Mirror Protocol and Terra looks like one of the best strategic partners. Yes, it's almost the same mechanisms. It's just that we want you guys to control what is it that you want the market to be created for, because commodities internally from a retail perspective are not very common. So also, what commodities are you targeting? I want that to be a discussion and pass through governance proposals, because if there is an absolute demand of let's say oil, lumber, metals, whatever, or soft commodities like wheat, we can certainly get it done as long as there is a price feed for it. And this is why it is so important to onboard multiple Oracle providers in the ecosystem. So we will certainly get it. And like Siddharth was discussing, would you guys want synthetic BTC there as well, because that is something for which we already have price oracles coming in, and it can just use the same mechanism. We can also create those pools on osmosis, because so it depends on absolutely you guys and how you want the protocol to proceed, and we can keep building that. People want to know why not integrate with USD and Mint. The stable coin might just have USD as an acceptable collateral as well. So it'll just be, we can take whatever was the last depeg of the USD and use that as the benchmark to just a little bit to over collateralize it a little bit and still use a native stable coin. So that is. I mean, it's exactly what you're trying to say.
So I guess also expanding on the stablecoin subject a bit, in terms of the broad spectrum of all the stablecoins that exist, we've observed that the two emerging sort of stable models for a stablecoin. At one end we have what USD follows, which is a senior age-based model of direct conversion of Luna to USD and rebasing of the supplies on both fronts to maintain the peg. On the other end, you have MakerDAO, which is like a fully collateralized model for stablecoin, where you sort of create the stablecoin in the form of an over collateralized position. So in the Cosmos ecosystem today, there is USD, which is sort of flourishing and has seen adoption across the board. But it just sort of makes sense that within the broader spectrum of all the stablecoins that are out there, there must be also a collateralized stablecoin, which is also decentralized and IBC enabled, allowing holders of IBC assets to collateralize and then also mint the stablecoin. Just sort of, I mean, we've also as a team looked at a model of another stablecoin that we came across called Frax, which is another interesting take, where it's sort of like a fractionalized collateralized model, where part of the collateral comes in the form of stable tokens like USDC, and the remaining part of it is the volatile collateral token, which is the token of the Frax itself. So that's sort of the various approaches we saw, but then just going deeper into it, it just felt but given the structure of the chain that we have in place, given the CDP modules that we have in place, that launching a USCX would be something that would be relatively easier for us to do, and also we see an adoption for it through our enterprise application settlements, through ShiftFi financing as well. So there is a roadmap for increasing adoption for the USCX within our ecosystem itself. So it just made sense for us to have a stable coin of our own. Yeah, I see a question which also talks about having a look at the stable coins offered by eMoney. So we have actually spoken to the team at eMoney. We're also looking at ways to integrate their stable coins onto various applications that we might have, especially on the C asset app itself. Potentially allowing that as a collateral to mint commodity synthetics. I think I'll just go through some of the questions quickly. What commodities are you targeting first? So we, as you guys saw a few minutes ago on the screen, we had gold, silver, and crude oil. That's what we have ready to launch. As we sort of make progress with the different Oracle teams we're in touch with, we'll be able to expand on that front as well. Abhishek, you want to take the next question? It's about how many relayers have been set up for the platform.
We said relayers for currently in the DevNet with the testnet of different protocols. Relayers will be set up for all the chains that we showed you in the asset list. I'm not fully sure where you're I think you're picking it up from YouTube. I'll just let me go to YouTube and see the questions.
Oh no, I was just checking it on the Zoom chat. I've just seen another great question, and I think we should take this. The question is, if we speak not only about insights, but also about some practical support what can be offered at this point? How can people support Comdex at this stage of development, and what's a priority for us in terms of what validators and then the broader community can offer to us? So I think I'll take this first. So as you guys just saw, there are many many new initiatives we're sort of taking up now with the lending protocol, with the stable coin, and within the enterprise applications, trying to expand with settlements in the real world and also on ShipFi pretty soon. What we kind of want to do going forward is, a lot of the internal mechanisms of a lot of these applications, when we are in the process of discussing them as a team, we kind of wanted to open up this discussion to the broader community and hear the insights as they are being built, rather than build them and then sort of see the reaction of the community. So that's sort of a fundamental change in process of building that we wanted to implement going forward. So in that sense, I think, as and when we start building up discussions on our forum channels, it would be great if, people could contribute. A lot of times the space, the DeFi space expands so rapidly that it's difficult for an individual to keep track of everything that's going on. But I believe the combined knowledge of all sort of is a overpowering effect that can help us all, navigate this better. So that's sort of the purpose of this town hall as well. And it's also sort of an announcement, not only of all the various initiatives and all the various tokens that will be coming out in our ecosystem, but also an announcement of difference in approach that we want to implement going forward. But yeah, Abhishek, if you also want to speak about, various ways that folks present on this call or on the stream can contribute.
No, I feel one good way would be to see go through our if I can understand some of you come from a very deep technical background, and maybe some of you maybe come from marketing backgrounds. So if whatever if you are it come from a tech background, please code is open source. Please go through, and if you find a few things. We will be having a bug bounty program as well. We didn't openly discuss, but then we getting security audits for Cosmos projects is like not super simple as well. So if you know a good security auditors would be great, and if some of you already have that skill, feel free to check us out as well. So that's primary, and if you're from marketing, obviously feel free to help, and you can discuss whatever plans you have to do additional marketing in whatever fronts, and people from our team would obviously would be happy to make such plans together with you guys.
One more good question I saw is, how will we bring awareness about the commodity market in retail? So again, that would be something that we're also sort of working on in the back end, where we have a few folks who are trying to create that awareness about how commodities can be an investable asset, and maybe propose different ways people can leverage having access to commodities through exposure on the platform. But then again, points like these is where we sort of imagine the community playing a role as well, because a lot of the people present on this call have great reach within the community. So would love to get in touch with you guys, to tap into your channels about how we can spread information or spread, just knowledge about the realm that people aren't so exposed to, which is commodities. Let me just take a few more questions. Will traders have any incentive to
can you take one more question? Will Kepler be the wallet of choice initially, or will there be other wallets need to access the DEX? I think we missed this question.
Oh yeah, there's so many questions I would have missed for sure. Abhishek, you wanna take this? Just sort through the
Dheeraj is already here. Dheeraj can answer.
Yeah, the reason I took this question, because we already have a design of our wallet ready, and we are working on it to create we already have designed it where we'll show all the assets and everything, which will be not. I would say we are even launching Android and iOS app for it. So it's in process, and this is the reason I brought up this question. So we'll soon have our wallet ready for Comdex app.
Yeah, but to start with, users can use it will be integrated
Kepler
with Kepler, so you can use the Kepler wallet to use the platform. In addition to Akash web hosting, yeah, I think few things already run, with Akash. So we will see how we can, do a deeper integration moving forward. Reward testnet users, yes, there would be an upcoming plan. So as like I told, we will be soon updating the binaries of moving this app to the testnet, and will open up things not just about finding bugs, but also to see and kind of teach users in a way to learn how to use the platform as well.
Awesome. I'm seeing I can already see a lot of folks have responded with suggestions for different Oracle teams that we can reach out to, and this is exactly what we meant in terms of as soon as we open it up to you guys in the community, we're able to get a lot of things rolling. So we'd definitely love to reach out to the folks that have been mentioned. I can see Microtech is one, and Odin Protocol is another that's been mentioned. So thank you so much, guys. We'll definitely have noted these down and look into them. Yes, let me look at more questions. It's awesome. I'm loving all the questions. Can we see that asset list again, please? Sure. If we can just go back to the screen for the app, if that's what. In the meantime, I'll just get more things. Yeah. So, what marketing steps will be done to attract more audience to the platform? We as soon as we sort of are in the stage where we can have this platform readily accessible on testnet. We'll try and figure out, we have a few things in mind where we want to incentivize to be early adopters of the testnet. We're also thinking of probably doing a waitlist sort of approach first, where we create a waitlist for early access. Maybe the early access is given to either stakers or LPs. We will be figuring that out as pretty soon and announcing that as well. But then, a lot of the push on marketing would probably be coming initially through the form of the attractive rewards we can offer for farming, and then also different rewards that we have in mind as like structures for creating the initial liquidity of the synthetic assets as well. So a lot of this, as I said, we're still in the process of figuring out and finalizing, and a lot of these things will now make their way to public forums. So that we're able to get the insights of everyone on them as we move along as well. Okay, let me just see. Okay, since this is the community, any details about the rewards and testnets? Yes. So a lot of these details will be, as I mentioned, released pretty soon. Our forum is also live, so we'll be pushing a lot of the forum part of our we'll be making sure that there's a lot of awareness about the forum as well within the community, so that people can participate and actively contribute to it. And then would also love if you guys could also help us in the support of making sure that as you guys have, a lot of you have already been doing that very well. So just going forward, continuing to help us get these messages through to the community as well. And then we intend to sort of keep doing these periodic town halls as and when we make updates in our journey. I just see a few more questions coming in. Okay, Dheeraj, maybe you want to take this question. It's what about IBC relayers between Comdex and all other chains? When will the testnet? When will we testnet with the test IBC relayers?
Yeah, we have right now, if you see, we have tested all the relays with all the networks. So the date, I would say, we are planning by 15th of April. Let's say we'll launch it on testnet. We are testing few things and make sure that everything goes smooth. The date we have in mind is 15th April to launch it on testnet. And the DevNet which we are having currently, we can make it public by, let's say, 31st of March itself, so that before going on to testnet, community members can try it out.
Thanks, Dheeraj. I see another great question here by Chango. It says, for Osmo as collateral, could we use superfluid staked Osmo? Definitely a great idea worth looking into, because we already sort of originally thought of integrating with various liquid staking protocols like pStake or others like Lido to figure out if staked assets could be used as collateral, so they generate yield while they remain in the vaults. But this is also, I think, an interesting idea and something we can surely dig into. Thanks, Django. This is a great suggestion. Are there legal boundaries? Which kind of assets can be listed on Comdex? Yes, I mean, kind of yes and no, because the precedent and a lot of these things are yet to be set. For us, we have our existing networks and expertise in the commodity space, and we have a great, sort of understanding through our network about how the trends would be on the commodities side. So we have focused a lot of our approach on the synthetic assets towards commodities for that reason. And then also in terms of a broader hypothesis, we always believe that going forward, making commodities an investable asset could be beneficial, because in terms of equity markets and traditional fiat markets, there is a sense of high inflation, high money supply, and sort of like an impending doom, feeling around various currencies out there today. So we do see commodities picking up interest because people want to sort of hedge against fiat as a whole. So that's sort of why we've chosen the commodity route when it comes to the synthetic assets as well.
I have one more question from YouTube. It's a bit of topic question. ShiftFi will decide on the Comdex chain. Yeah, so that's the plan actually to do it. Yeah,
that's right.
I mean, we won't name it ShiftFi now. We have a different name.
Yeah, so we're No. So ShiftFi still remains ShiftFi, but we're kind of rethinking if we can rebrand on that front as well. On the enterprise trade as well, we launched enterprise trade as Comdex, but Comdex soon became the Synthetics protocol. So we have plans to launch enterprise trade as a rebranded app as well. We're very close to finalizing the name, so I'm kind of hesitating from saying the name right now on this call, because we might just be announcing it in pretty soon. So I'll just hold on until we're there. Will there be possibility to get an access to test the platform and create a video on how to use? Absolutely. As soon as we're sort of in a stage where we can have these screens ready, we'll share them with you guys, and then you guys could. It'll be awesome if you guys can make content around it to educate users. Shorting of commodities is possible, correct? Absolutely. So when you create a commodity by minting it on the protocol, you essentially take a short position on them, because your debt remains in the form of quantity of commodity. So it's beneficial to you if the commodity loses price in the time that you hold it before you return your debt, because then the same quantity of commodity costed you lesser. I actually did a great video with Coney Daddy in Denver, and we went over an example about that, and I saw some great visuals in that video. So I recommend you guys to check that video out. I think that was a great conversation we had, and the visuals really help understand how minting commodities would actually be shorting them on the platform. Thank you, Coney Daddy. Shout out. Can you give more details on what will be the incentives for the users to use the platform? Absolutely. So, in terms of the basic incentive models we have in mind, initially, there's definitely a large chunk of incentives coming from farming and providing liquidity in the commodity pools itself. We could have dual incentives of the CMDX and the app token as well, depending on what pools are being incentivized. For a lot of the initial liquidity that gets created in various commodities that exist, we'll try to focus on incentivizing the creation of certain synthetics before others, based on how the liquidity looks overall when we launch. So those are sort of the initial incentive structures we have in mind. Again, a lot of it will sort of take shape as we are coming closer to the launch, and a lot of these discussions will also open up as we come closer to announcing them and finalizing them as well. Do you think CMDX is mature enough for a team to understand the price volatility and be able to CS
I would answer that. Yeah. So you're right. I think and this is why in our discussion forum we are trying to list assets and kind of classify them into different segments where if it's a highly liquid asset, it's the collateralization ratio that would matter a lot. So CMDX being a fairly new token, it doesn't make a lot of sense to do it. But if even if you remember early days of SNX, SNX itself was used but at a 750% collateralization rate. So we can have it at a very high collateralization ratio, but it still makes sense that I think with enough liquidity on Osmosis, it still makes sense to be used as collateral. And we can also limit the total amount of assets that can be minted through the CMDX token, because ideally we would want only very highly liquid tokens to be used as collateral, because that's the primary thing that helps during liquidations.
Awesome. I see another question here. You mentioned NFTs. If NFTs on Secret Network, how can Comdex be fused to NFT? So I guess this relates more to what we spoke about in ShipFi, where essentially following the same structure where a debt is created by collateralizing an asset of value. We create NFTs that represent real world assets of value, and then that NFT is acting as a collateral that can be used to create debt. So that is how ShipFi applies this technology. But again, this is a great suggestion, and this is something I've seen sort of emerge in a few applications. I know on the Solana ecosystem, where actual NFTs like whatever exists on the Solana ecosystem today, it can actually be used as collateral to borrow against on the Solana ecosystem. So potentially, what that means is you could have Star Trodes as a collateral on Comdex, potentially if governance is able to pass it, and if there's sufficient liquidity for them, as Abhishek mentioned, or if not on Comdex, it's possible for someone to use the CDP module and the DEX-based module to create another app that allows collateralization of NFTs, and then create synthetics against them or create debt against them. So there are possibilities to combine these modules. So NFTs as collateral seems like a great idea because NFTs are fundamentally an asset of value. And can have sufficient liquidity depending on what the NFT is. So yeah, absolutely, Dave. We could there are ways to get that done. Let me just take a few more questions. How will the prices work when the commodities market closes banking? So this is kind of key. Having access to the live market prices of commodities is key to the minting process of those commodities, because the time that the Oracle plays a big role is at the time of creation of the synthetic asset. How much of that asset gets created is a function of what the price of that asset is in the real world at that point. So if at that point the real world market for commodities is shut because it's outside of trading hours, what that would mean is you can still trade those assets on the CAsset app, but you wouldn't be able to mint new synthetic assets on the CAsset app so long as the market for that asset remains closed in the real world. So I mean that would have to be a sort of fundamental way we'd have to do it. Are you going to be participating in technology or blockchain conventions that speak on behalf of Comdex? Absolutely agreed. We do plan on having presence across various conferences. I've myself attended a few in the States recently. I was in Denver and at Decentral in Miami as well. We will be attending ETH Dubai. We in fact have quite a few folks from the Comdex team who will be present there. So if any of you are there, do drop us a message. We'd love to hang out. I think the first event for ETH Dubai, which is the 29th evening, we're sort of co-sponsoring the event as well. So it'll be great to see you guys turn up there, if you guys are around. And then for the future as well, I know there's a conference that's potentially coming up in Austin in June. We might look into that. Major reason that the US conferences kind of become harder is because I'm the only one on the Comdex team right now who's able to travel to the US. But would love to sort of onboard more folks who are present in the US who can also probably represent Comdex as ambassadors in these conferences and accompany me as well. Blockchain Summit in Paris, 13th to 14th April. Awesome, thank you, Vladimir. That's amazing. Any more fresh alpha for viewers? I mean, at this point, I think a few big announcements on the way. As we mentioned, the rebrand of the enterprise app. and a little more insight into what's going to happen going forward on the enterprise app as we integrate with settlements on USCX. USCX launching would also come with its own governance token, and also, as Abhishek mentioned, the token that sort of can be used to rebalance and repeg the token. Komodo will launch with CMDO, which is a sort of native token for Komodo. The synthetic asset app, CAsset, will have its own governance fees and reward-based token. So all of these tokens will sort of play very specific roles for the applications that they're designed to run. And obviously, all of these being part of the Comdex ecosystem, it's expected that we'd want to create, through various schemes, like through various systems like airdrops and through various manners, just incentivize existing Comdex holders, takers, and LPs to get involved on adapting these applications. I guess that's primarily some of the big things that people can look out for going forward, because that's all certainly underway. Let me see if there's any more questions. If not, I think we're running pretty close to time. Can probably open up again if more is in the chat. Yeah, I don't see. Oh yeah, okay. There's one good question that we received: is will traders have any incentive to buy CMDX coin? What is the main reason to hold CMDX coins for a commodities trader? So interestingly, how it would work for the application itself. So all of these applications that we have, CAsset, Enterprise Trade, Komodo, would all be running on the Comdex chain and utilizing modules on the Comdex chain. So there will be a lot of activity that accrues from these applications on the chain. We're still in the process of finalizing how exactly those mechanisms would work, but the fundamental behind all of them is to create structures that always accrue value from high usage on applications down to the chain layer as well, so that the value accrues to holders and stakers of CMDX. So on the enterprise application front, for example, when commodity traders are using that application, as they're able to sort of see the usage on that application grow, and that would primarily come from realizing the value of settlements, of instant settlements, as opposed to 5-6 day settlements that Swift typically offers them. So when they're able to sort of realize the value from these things and the usage is able to grow, that sort of becomes the incentive for someone like an institutional commodities trader to hold CMDX, because ultimately the way the chain has to be structured is to capture a lot of the value from adoption on all these applications. But yeah, more details on that surely as soon as we announce the rebrand on the enterprise front as well. Is having all these different things to Comdex, so will they work more like DAOs where Comdex, chain, and token have ultimate control? Abhishek, you want to speak to this question a bit?
I think this is something that you just answered, right, as well. But
yeah.
So governance tokens would also be like, applicable to their respective dApps, and this is why we thought it should be a different set of tokens, and we'll try to do even more decentralized launches where a large majority of it goes to the CMDX takers and LPs as well, and they will work more like DAOs where you can vote on app specific changes, and when you want to vote something which is native to the chain layer, then you can use the CMDX to actually vote. Another CMDX also would then be used as providing liquidity for these tokens to trade, because then there would be no need to actually buy some other token to actually trade the market in the first place. So this overall will help getting more liquidity for both these assets as well. ZK rollups or other means, this is something that a lot of people want, and obviously privacy is a very important thing. So we don't really have a plan, but if you have a plan that for ZK rollups or to obfuscate data, please use the discussion forum and suggest ways to do it. We'll be happy to work on it internally to get this out.
Awesome. Yeah, I think we're closing in on the hour, so good time to probably wrap up. Thank you everyone who joined and came in with very good questions. A lot of the Django's come in with a point. I'd love to read that. Perhaps use threshold decryption after other teams like Osmosis and Nova have done the heavy lifting. Yeah, can surely look into that. Thank you, Django. And yep, thank you everyone who came here and joined us. Hopefully we want to do more of these going forward and hear more from you guys as we build out on these. Obviously the discussion doesn't stop here. We will keep having a lot of these discussions on open forums like our Twitter community chat and our forum as well. So, happy to have you guys get involved, and thank you so much for coming here today. Take care and goodbye everyone. Bye-bye.
Thanks everyone. Take care. Bye.
Thanks all.
Take care. Bye.
Thank you very much. So many friends here. I want to speak with many of you. Zdadex, see you soon in Paris.